Hey there, Wall Street winners. It is Wednesday, May the 1st, the start to a new month, which means that we have closed out April, which was not the best month by any means in the current year, 2024, for trading, although it had a tremendous amount of volatility and some good and bad earnings reports, which can certainly help from a active portfolio, active trading perspective. As we look to our day today, let's go to the Bloomberg app, really the open email initially, and it's all about the Fed and Jerome Powell. He's expected, as you can see here, to come out more hawkish with a more hawkish tone and potentially delay rate decisions. And traders are waiting on that to see how that impacts markets. If we go over to the Bloomberg app and markets and the futures indexes, we can see that we're red across the board for the U.S. indices, down 73 points currently with just about 45 minutes to market open. On the Dow Jones, we've got the S&P 500 futures at minus, call it 20, and the NASDAQ minus 95, 96. So that said, I think we're probably going to start off in the red today by the looks of things. But depending on what the Fed says, we could see certain sectors become quite hot after the announcement, really regardless of direction, because different sectors are going to move in different directions, potentially based on what is said. We're also seeing oil is off quite a bit, only because there's been some talk in the U.S. about oil reserves being near peak levels, and that's signaling that there may be enough to support summer and fall demand. And if that is ultimately the case, then it could drive down the price at the pumps and the price in crude futures, which are down, as you can see, by $1.04 right now. I'd see this as a temporary setback. I think this ties in logically with some of the ceasefire discussions that are going on over between Palestine and Israel and the other countries that are involved in that uproar, or I don't want to use the wrong word to offend anybody, but the issues that are going on over there right now between multiple countries. What we can see in the tech market is we had some results after the close yesterday. Microsoft, hopefully you sold it after earnings earlier last week, because it was off $12 yesterday, almost $13. Looks like it's going to make a bit of a recovery today. Would be an interesting time to potentially buy into that, because they did have a good earnings and future forecast story. So anytime we see a sell-off, I think there's an opportunity to acquire more. ARM is going to announce earnings later this month, towards the end of May, and they're down. They're $30 off of where they were pre-earnings in Q1, and they shot up into the 130s. So they're kind of halfway between where they were prior to Q1 earnings and where they were after. So there could be some interesting moves there. On Semi had okay results, but kind of missed on future forecast. So they popped a little bit, and they've started to come down into the low 70 range there. What we're really waiting for, we saw Amazon. It had good results yesterday with its cloud business. Still a little bit of concern on the retail side, just because overall retail demand has fallen off in the U.S., in North America, really globally at this point. People have just, I think, bought enough, and they're now spending on other items. And with inflation, they have less disposable income. But it is up pre-market based on that earnings announcement. What we do have coming out Thursday are a couple of big ones. Apple, obviously, the biggest aftermarket Thursday. And then Cloudflare being another one, which I do feel is set up well to exceed earnings and have a very positive future forecast going into the year. We had AMD come out yesterday. Obviously, future forecasts and earnings were not what they had hoped for. That's off $9 right now. So that's going to be down in the 140 range. At some point, we are going to see a refresh on the corporate notebook desktop side, the corporate PC side, as well as the home PC side. And as soon as we start to see evidence of that, and maybe it's September with the return to school, or August with the pending return to school in the fall, that we'll see an uptick there. What we are seeing pre-market is Electronic Arts, the gaming company, is up $10. They're 6 days out to earnings, so that's an interesting move upwards on their part. Not sure what the news is there, haven't looked into that. But with the earnings report from AMD, you're seeing other chip-related companies like Lam Research off a little. They were off 34 yesterday. They're off 14 pre-market today. Meta continues to drop slightly. I mean, it kind of bottomed out at 420 and then popped to 440 after earnings. Now it's in the high 320s, low 330 range. Nvidia took a hit yesterday as well, so up into the 880s yesterday, but closing down at 864 and off 13 pre-market. So again, just speculating that with the announcements from Amazon and Microsoft and Google, I mean, just Microsoft and Google alone, I believe, were investing $45 billion in AI technologies. Then you add to that the likes of Amazon and Meta and every other company out there. It's still highly likely that NVIDIA is getting the majority of this, and they could be priced at a pretty good discount right now going into earnings at the end of the month. And then we have the financials, and the financials overall have been doing pretty well, if not making significant moves up, at least holding their ground. JP Morgan at 191. I'm not 100% sure how these are going to go with the rate announcement. Some of the things I read tell me that rate decreases will hurt the financials. Rate increases were spoken of as hurting them earlier last year. So there's mixed messaging there. I believe that if we see the Fed today at their announcement at 2:30, Jerome Powell come out and say that they're going to hold rates where they are for longer, even potentially increase rates. That's going to be a shock to the market, but financials might do well with that news. Now, it doesn't even have to be a rate increase. It just could be holding them at the current rates for longer. I think is going to be a positive message for the financial sector, and could hurt tech a little bit, but the strong tech companies will still be well positioned 3 to 6 months out. They may take a momentary hit, momentary correction, and which sometimes happens when interest rates go up, although recently it's had less of an effect, especially on the stronger ones, because of their borrowing capabilities, and most of them had made significant borrowings if required back when interest rates were 1%. So that's where we are today. Good luck with your trades. If you're liking these videos, please subscribe to the channel, share it with a friend who wants to learn about stock investing and active trading, and leave me a like.